All right. Good morning, everybody. It's Tuesday, I think, right? I think it is. Yeah, it's a Tuesday. Cool. Super Tuesday, in fact. So get out your vote. This is a big voting day in the United States of America, and that could create some volatility. Then tomorrow we have Powell testifying, and then again on Thursday. And then Thursday night is State of the Union address, which is a big day in the United States. And I think particularly for Biden, I think he just needs to get through it without making a mistake. Otherwise, they're going to make a big deal out of the mistake. I mean, imagine the pressure of that. You give a 2-hour speech, and if you bumble one word, they're like, senile. You're like, I bumble words all the time, and I don't think I'm senile. But anyways, look, life is unfair. Get over it. That's how it is. So, anyways, it's going to be an interesting, and then non-farm payrolls on Friday. So a big week. But welcome to QuantBox Live, where we get our global macro on. I can cover the best fundamental investment opportunities. My name is Wayne. Went to a private little school named Harvard. It was pretty cool. Across the street from Harvard is a park in which George Washington gathered his troops the evening before they attacked the British, and there was a big battle further towards Boston in a place called Charlestown, which is Bunker Hill. So, anyways, they all met across the street from Harvard, which means Harvard's older than the United States by almost 100 years. Anyways, interesting place. You should go check it out. It's an interesting little school. So, anyways, yeah, so I like fundamentals. I'm willing to invest a lot of time and money into fundamentals because I believe they matter. It answers the question that I spent a decade trying to figure out. Why is the market moving the way it's moving? Technical analysis never explained that to me. So, anyways, looking at all these fundamentals, we can see why we have trends. We look at seasonality, we look at economic data, we look at retail and institutional positioning, otherwise known as order flow. We look at long term capital stocks of assets, but also the flow of capital in and out of assets week over week. We look at what the economic staff at central banks predict for the future out 18 months in advance for inflation and interest rates. Therefore, we're basically graphing their policy and therefore can make wise investment decisions based on what the central bank is actually telling us, not by somebody's guess. Why guess when you have the data? Then we take all of that and then we look at it by looking at correlation amongst different assets and three different time frames for those assets to look at the current underlying intrinsic trend right now, not based on theory, not based on guesswork. What is actually happening now in the market? Not one asset, the entire market. And therefore, we can do things like see what's happening in the moment versus what we think would be logical on the long run. Okay, short run versus long run, which is great because that's exactly how economists tried to solve the puzzle of analyzing what is happening. Economists always look at long run versus short run. And so QuantBox does that very, very well with pretty colors, I might add. So if you're watching this on YouTube, why don't you try it out? $7.90. Good. And in that, you also get a training course, two training courses, one on macroeconomics and one on statistical analysis. And it makes it super easy. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, can't afford to lose. Why is it giant? I don't know why it's giant. What did I click? I guess it popped it. Okay. So, anyways, YouTubers, There's the macroeconomics course. There's the statistical analysis course. So you learn how to trade using a scatter plot, for example. Cool. And I've reorganized where the videos are. So now we have a folder for all the February videos. And now, so when we go to here, so now we have January and February, December, January. Oh, I guess, well, February, I forgot to make it visual. But anyways, we're here on March. All right, cool. So apparently I have to click a button to make it visual. All right, but I'll do that. It's just clean and organized is all I'm trying to say. So clean you can't even see it. Yeah, that's that clean. Yeah, yields up a little bit. Boo. We were 419. So again, just to I don't know, restate the obvious, but it, you know, it's important. We look at this, or at least I look at this. It's funny, I should be looking over here. I go to this number first. This is the treasury market, and it tells me whether money is going into treasuries or out. And the reason I care about it is it tells me what the market believes the Fed is going to do. If they thought the Fed was going to raise interest rates, you'd see that sentiment here. If you thought the Fed, if the market thought the Fed was going to cut interest rates, you'd see that move here. And so every day I look here and there's basically no real change since yesterday. But over the course of several days, yeah, this was closer to 4.3. Now it's just over 4.2. It was 4.18. So it's just kind of now reverberating around the 4.2. But the closer it gets to 4.0, the better it is. Meaning the market believes the Fed's going to cut soon. Right now, it's holding tight, which means they don't believe the Fed's going to cut soon. It's one way to gauge monetary policy. Look at everything going neutral on us, huh? Yeah. Going neutral. Interesting. Daily evaluation, nothing. Let's take a well, you know what? I forgot to go over the other assets. Oil down to 78 and a half. Okay, that's cool. It's a big drop. Remember, we were tickling 80. So a big drop is okay. If you're a bull, now you're analyzing different levels in which you might consider buying. So that might be an interesting day. Gold is doing very well, still moving up. QuantBox has a pretty good score on it now. And I think 3 weeks ago said gold should go up, and it's been going up. Very cool. S&P 500 holding stable above 51.00. Euro dollar making its way up. We've been farting around 107 to 108 for quite some time. I think I had it going up as high as 110 for the high of the month. So we'll see. Right now it's flat. And Bitcoin, well, it's up, but it's down. Okay. It's up, but it's down. Because it was higher than that before. I think, is it 69,000 that worries everybody, the all-time high? So anyways, if you look at your chart, yes, it's up, but it used to be higher. It's just less up. All right, so now let's go into the higher time frames. And we have a bit of risk on that is still ever so slightly lingering, but we're not getting anything anywhere else. Oh, the indicators are working, but when you add it up, it adds up to nothing. A hill of beans. No, They're magic beans. No, they're not. Yeah. Yeah. So, anyways, yeah, whatever. So VIX is down. That's good. Gold is up. You might say it's good. I say it's bad. You could argue the other way and flip it and make it a three. Well, that's your call. Okay, yen is flat. That's neither here nor there. Dollar's flat for the week. Not this week, the last 7 day or 5 days of trading. Okay, so neither here nor there. Yields are down. That's good. S&P 500 up. That's good. So you get a 2. That's not very strong. And that could peter out pretty quickly. Oh, the S&P 500 is up 1% for the week. All right, so if you have a down day today, that goes back to zero, right, or negative, and we lose the risk on. So we don't have multi-time frame opportunity here, so still a lack of intrinsic trend. Bitcoin only up 2.6%, and it was up higher. So I think we should remove that as an outlier, huh? You have to, yeah. And I would analyze this as moderately bullish, and we kind of see that in the risk gauge, right? Now remember, this is completely different math. And it's kind of telling us the same thing. Some things are doing well as expected. Um, and it seems in general there's a slight risk on bias. If I hope you agree with the way I drew this. And the way I drew this means everything. Let me do it this way. Everything over here is doing as expected. Okay. Everything up here is doing as expected. And so the other things are the outliers. QuantBox thinks everything down here should be more up than down, but they're down today. So these might be your buyers. You might buy these today. You might. Or at least you'd go to the chart and look for technical analysis to say, because remember, these scores at the bottom are setting the idea that they should be up. Well, the scores are long term. And then these dots have to do with whether they're up or down today, or not even today, in the last few hours. So there's a difference between long term and short term. So long term, everything down here, QuantBox would expect to be up, but they're not up. But maybe they'll be up later today. Maybe they'll be up tomorrow. So these are your opportunities for maybe buying dips, and maybe these are your opportunities for selling rips. So that's how you should look at that. The nice thing is that's actually pretty complicated analysis, but QuantBox helps you see that in like 1 second. Oh, maybe I buy Kiwi yen today. I don't know. Let's go take a look. Maybe I'll buy CAD yen today. Maybe we should go take a look. And these are already winners, but we already knew that. And it's already happened. So why buy something that's already moved? Okay. Cool, right? So you just log in and you're like, oh, I might want to buy these. I might want to sell these. And now you go to your charts. Oh my God, really? Yeah, that's why we have this. So like we could pick on one, Kiwi or CAD. Do you want to see if we should buy a CAD yen? Well, let's take a look. We can do it this way and take a look at CAD yen, see how it's doing. And there it is. Look, it's down a bit. Okay, it's made a lower low, so I would look at it this way. And QuantBox is already showing you, but instead of looking at it, I'm just showing you the way I would look at it. And then maybe a parallel line of that. QuantBox is doing that. So QuantBox is looking backwards, right? Creating a mean and a slope of the mean that looks, I'll do it in black. Let me change the color. It's okay. It's analyzing it this way. That's about right. Cool. And these are standard deviations, standardized variance. So you get a worst case worst case, best case, base case scenario. Cool. Now, what if it changes? Okay. What if it changes? That's what you want to look for. Not that it's going to, but what if you noticed something like this over the next few hours or couple of days? Then it might become an opportunity for you. And what you're trying to catch is this March to April move. Over the last 20 years, it tends to go up. Over the last 5 years, it tends to go up. And the Canadian, right, this asset favors Canada ever so slightly. There's not a lot of money on the Canadian dollar right now. But what if that changes? Well, you'd see it technically, and then you would play the seasonal move. So you're like, huh, okay, that's okay. That's an okay trade. But then you can do some comparative analysis on some of the other ones that came up in the scatter plot. Okay. QuantBox sees this is down. There's a lot less opportunity here, but there's more money in Kiwi. It's just not moving up yet. So you're like, okay, I don't like this. It's got a pretty decent carry. Hmm? The carry is nice, isn't it? You're like, Wayne, explain the carry. Okay. What we're looking at is how much does New Zealand pay you when you lend it money? But you've leveraged. What's your leverage? Are you in the United States at 50 to 1? Are you international at 100 to 1? Well, where did you get the leverage? You leveraged using yen. So you took out a loan, you put up some collateral, use some dollars, let's say, to buy some Japanese yen times, let's say, 100 to 1. Okay. That's a lot of yen. And then you lend the yen to New Zealand. So now you convert the yen, okay, to Kiwi dollar. So I guess we have to do just NZD. Cool. So great. So New Zealand pays you money. And then you have to pay Japan for the loan. So you only use dollars collateral. So you have this loan. So you got to pay them for the loan. But you get to keep what New Zealand pays you for the loan. You're acting as a bank. You're financing New Zealand. Sweet. Okay. And that's indicated right here. Okay. In this case, Japan actually pays you money. Well, even better. New Zealand pays you 5.5, and you're 100 to 1 leverage. So on your money that you used as collateral, we call this internal rate of return because you're getting paid 5.6% on the money you lent to New Zealand, which you leveraged. So you gave 100 times more of a loan to New Zealand than you put up collateral. So then you look at your internal rate of return here, and at 100 to 1, that's 560% a year. Ooh. Okay. But that one looks mediocre. Was pound one of them? That might have been an opportunity. Well, let's take a look. Seasonally, there is up, but it's not amazing. But technically, this one is much nicer, isn't it? It's got a positive mean. How can mean be positive, Wayne? Mean is negative. Well, everybody likes mean girls, right? So, anyways, slope, positive, rise over run is a positive integer. So that's bullish. Cool. Is there bullishness anywhere else? A little bit here, not amazing. Positive carry, 5.25% interest rates in the UK. 66%, 67% of institutional investors are long. Commitment to traders, bullish. Retail, bullish. Seasonality, not quite there. Trend, got it. Economy, no. I guess I should erase that. No. Inflation, interest rates, employment. So, anyways, good. Slightly. So you're like, maybe CAD, maybe Kiwi, maybe pound, and then you drop in, right? So, what's the trade plan here? Okay. If that's going to work, that's how it'll do it. We looked at a Kiwi, didn't we? Kiwi. If that's going to work, what will it do? Okay. Well, I've already got it drawn on the long term. On the short term, look for something like this. Okay. If you intend to be a bull and you just saw the economic data, now, if you're a bull and this falls, don't do this. Don't buy it here. 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 That's an amateur retail mistake. Do bulls buy lower lows? Impossible. If you follow that one basic universal truth, you will be fine. You're like, Wayne, QuantBox tells me to be a bull and it's falling and I'm losing money. Well, then you're a bad trader. You need to up your trading game, technically, because a bull never buys lower lows, ever. Okay. So this is why I say, like, if you were a bull and it double bottomed on the central pivot, you could buy a double bottom. And then if it makes a higher high, can you buy a higher low? Yes. Bulls only buy double bottoms or higher lows. If you follow that basic rule, you'll be fine. So if you're like, I want to be a bull and QuantBox says I should be bullish. Well, look, bears really sold it. Like, I can't tell you if we're heading down to there. If you're a bear, that you're absolutely convinced that that's happening, and that might actually happen. Not based on economics, but be based on reality, market realities. based on things like maybe a change in central banking policy in Japan. So if you were binary about it, if we were either falling, okay, or we were rising, you have to choose one of them. So if you lean on QuantBox and say, QuantBox, help me, what should be happening? And it says, well, economically, you would see New Zealand has an edge over Japan. Then you sit here and say, well, technically, this is an important price. So if it makes a higher high now, I buy the higher low. Maybe that's today, maybe that's tomorrow, maybe that's Thursday. Okay. But that's what you should be doing today. You need to be planning out Thursday. You're like, Wayne, it's only Tuesday morning. Yeah. Well, that's the game. Okay. And if it falls and you're a bull, take a walk. Knit a sweater. Yeah. Wait your turn. Let the bears have their turn. And if you were so bearish, why didn't you sell the kickback to the 21? There's an obvious trade there. Okay. That would be pure technical. That's great. Okay. But I like to filter with fundamentals to say, okay, that could happen, that might happen, and that might be explained by a change in monetary policy, but that change hasn't happened yet. So, at some point, you wait, and that's that. You wait or you re-enter. Oh, Wayne, you didn't tell me patience and discipline was required too. Yeah. Yeah, unfortunately, you can't download that. All I can do is give you an automated process to do macroeconomic research for you and then comparative analysis of different markets, different asset classes, and long term versus short term. So, comparative analysis of different time frames that are correlated. You're like, dude, that's a lot. That's a lot. Yeah. But at the end of the day, you still need to be at least a half decent trader, right? So remember the basic rules of engagement. If you're a bull, you only buy double bottoms or higher lows. That's it. If it's not a double bottom or a higher low, it's not for you. Cool. Right on. We can look at, let's just very, very quickly look at maybe one more. We can do this CAD because this one's interesting to me because I'm on it. I've been on this trade for a month and a half. Yeah, cool. Middle of January. Cool. So here's how I look at it. It's going up and I'm going to make money, or I wait. Okay. So there's my plan all beautifully drawn out. This is what's going to happen, or I don't trade. And in fact, at some point, I might have to take profit on my earlier trade, which is still down here. Okay, cool. So if I was a bull, I would be required to buy a dip like that. So let's go into a smaller time frame. Let's say 4 hour or 1 hour. Okay, even better. And what I want to see, okay, is something like this. Let me change the color. Okay. Well, I've already drawn it. So beautiful. I've already drawn it yesterday. Sorry. Yeah, I want to see something like this. And when or if it does that, I have permission to engage bullishly, aka I attack this chart by buying dips. And if it doesn't do that, I don't trade. And if it falls further, I take profit and I exit the market because I don't like it. Cool. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you later today. Markets look pretty good. Remember, lots of interesting things happening. Super Tuesday, ADP, Powell testimony, State of the Union, non-farm payrolls. In there is ISM services. Oh my goodness, not a boring week. So thank you for being part of my team. I'll see you soon. Cheers.